Hope you didn't have the headphones on.
I did not.
All right, quit. Get in the zone here. Okay. You did it. You got pre-qualified, you dealt with the home search, and you found the right house. They accepted your offer, and you were officially under contract. Now what? This is where it gets fun. Okay, this is where I seriously love my part of the job because I've put so much into this next part of the process. So me and my team, we have it down. I want to share with you what you can expect because sometimes there are a few little surprises and things that can happen during the entire process which freak people out, especially if you're a first-time home buyer. So I want to explain the ideal way of how it goes and then what can happen and usually what does happen. Okay, so let's get into it. You have gotten pre-qualified, you know your budget, you found this house, you're super pumped for it. We got 30 days, and this 30 days is gonna go real quick, and there's gonna be times where it's gonna feel like it's going real slow. Step number one, you have that signed purchase contract. The seller has agreed to sell it to you for such and such price. You've agreed to buy it for such and such price. Normally what happens next is you're going to need to open escrow. You're going to need to put some skin in the game. You gotta put down your escrow deposit money. The hell is that, right? The best way I can explain the earnest money deposit, usually it's like 1% of the loan amount, sometimes lower, sometimes higher. But in most cases, we need that third-party title company. They're going to basically hold the money, right? So if I want to buy a house from my buddy, I'm gonna say, okay, man, I'm gonna buy this house for $400,000 from you. For now, here's $2,000. This title company is gonna hold on to it for us. That way you can't sell this house to anyone else during this 30 days that we're under contract, because I need 30 days to get my loan done. This money sits there and is ready to go. Now, that $2,000 or whatever that earnest money is, whatever your total dollar amount that you're gonna need for closing, which again, if we've gotten this far, you should know those numbers. Your loan officer or myself should have given you those numbers. You should know that before you're under contract. You know what your down payment, your closing costs, if they're contributing any seller credits to help lower those, you should know what your bottom line number needs to be at closing. So let's say it's $10,000. Let's say you need 10 grand total at closing. You've already given 2 grand up front to the title company in the very beginning. So at the very end, we're going to need $8,000 because we deduct the 2 that you've already given and that's what you have left over. So that's an earnest money deposit. You do need to provide that usually, I think, within 24 hours upon going under contract. Not a real estate agent, don't quote me on that, but pretty soon after you're going to contract, you're gonna need to give them that earnest money deposit. Do not write a personal check. It needs to be a cashier's check or wire transfer. And definitely don't use cash. Don't use cash at all during your mortgage transaction. Now you're gonna have some loan paperwork to sign. You're gonna have a bunch of loan paperwork. And this first set of loan docs always freaks everyone out because those bottom line numbers and the fees and all of that is usually about $1,000 or $2,000 more than the conversation we had over the phone. So you're gonna call me up and be like, Braden, what the fuck, man? Like this thing is 2 grand more than you said it was gonna be. No, it's not. So the reason for that, we have to disclose any and all fees that might be associated with the loan. So in many cases, there are additional fees in there that we know that we're probably not gonna need, but in some cases we do. In most cases, we don't. We still have to show you what they are because once we've given you that initial set of disclosures, those fees that are on there, they cannot increase. I cannot charge you more than what I've already told you it costs. So that's why we give you a worst case scenario. It's gonna cost this much money because I can always lower them. You're gonna get subsequent disclosures throughout the loan process until you finally get that closing disclosure, which will have the final accurate numbers, which we talked about in the very beginning. And in most cases, they're actually lower than the conversation we have because I try to give a worst case scenario also up front, because it's always better to find out you're paying less than the other way around once you finally get to that closing table. So just know, in that first set of disclosures, there's a lot of paperwork and they're a little scary. Me and my team are here to go through them with you line by line if need be. There's like 50 pages, so please don't make me go line by line. I know what all of them say, so I can easily give you a quick scenario of what they all mean. A lot of people also think that by signing that initial set of disclosures, you are agreeing to the loan. You are committing to me as the loan officer, to the bank, to all of that stuff. No, you're simply acknowledging the fact that you have taken a loan application and you would like to continue moving the process forward. So the faster you can sign those loan documents, the faster I can get everything off to underwriting and get it into an approval. You sign the disclosures. If there's any, outstanding documents that you need to provide, maybe an updated pay stub or a bank statement, we'll definitely need documentation for that, earnest money deposit that you did. So there's a lot of document collecting, and you're gonna be dealing with, mostly members of my team. They're gonna be asking for that, they're grabbing it and giving it to the underwriter. The underwriter is who approves the loan. So once we get the initial approval, you're gonna get something called a conditional loan approval. So yes, you were approved, but we need this, 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 and this. And usually it's another pay stub, or maybe there's something kind of weird in your bank statement. $50 leaving every single month to this person. What is that? The underwriter reviewing your entire loan application is the financial equivalent of a colonoscopy. We are looking at everything. We're getting all up in there. They're looking at all of it. So yeah, sometimes they're gonna ask for, in my opinion, stupid things, or what we call feel-good things. Just know it's just because they're trying to do their job. We have to sell this loan afterwards to the investor who's gonna buy it to make sure that you're gonna pay it back for 30 years. We need to make sure that you're gonna pay it back. We're looking at everything. And I know some of it might seem kind of weird. We need a lot of things called like letters of explanations, explaining why this or why this happened, or if you moved money from here to there. We have to document everything. And so it can be kind of frustrating, especially for first-time home buyers who've never dealt with it. You've already given your pay stubs, your tax returns, your bank statements, everything. And now all of a sudden we want to know why you're paying, $20 to OnlyFans every single month. It's none of your damn business. What is our damn business? Because we're giving you a loan for $400,000 or whatever it might be. So yes, we need to know all of that stuff, even though some of it might seem nitpicky. So I want to get it out of the way now. And you should challenge us on some things. If there's some things that are absolutely stupid, if you can explain it to me and I think it's stupid, I'm going to go back to the underwriter and tell him it's stupid, we don't need this. So just know I have your back. I'm fighting for you. I want you to get this loan just as much as you want to get it. Full disclosure, I don't get paid until the loan closes. I'm a commission-only employee. I don't get an hourly or a salary or anything. I don't get a dime until you have closed on that loan and you are in that house. So trust me, I'm very invested in the process, just as you are. Honestly, it's a lot of back and forth between the underwriter, getting paperwork, sending it back. This is what can be frustrating sometimes, and I'm definitely empathetic to that fact. But keep in mind, we're dealing with facts and we're dealing with what we have. So if you submit us a bunch of paperwork and you write a letter of explanation and it still doesn't make sense, or maybe it opened up another can of worms, it might prompt additional conditions. So in the beginning, yeah, we could say, okay, we need this, this, and this to close. Goes back to underwriting. They say, okay, well, we're good here, but now we need this and this. So we're gonna have to go back again, get that from you. So just know that there's gonna be some of that back and forth, and you just want to be as honest and upfront with us as possible so that we can help you and guide you with those letters of explanation. If you need help writing them out or making it sound a certain way, we're here to do all that. We are with you every step of the way, weekends, after hours. Like, me and my team try to be available as much as we can. And I feel that's what sets us apart from like the banks and credit unions. They're not gonna pick up their phone after 5 o'clock. They're not gonna pick up the phone on a Saturday or a Sunday. Me and my team will. That's the difference between us, and we're still very competitive. I go to bat again all day against those banks, and in most cases, we're beating them when it comes to rate and cost. So that's some of the benefits of working with me and my team. The biggest pieces are gonna be the appraisal. If an appraisal is required, that's what tells us the home value. Usually once we get that, that's one of the last steps. Work on the final conditions, send everything back for final approval. Underwriter gives it the big old approval stamp, good to go. From there, it goes to our document team. There's a lot of documents when it comes to signing for your mortgage loan, stack like this thick. And those ones have to be signed with a notary. There are some that you can sign electronically, but the good chunk of them have to be signed with a notary. So once we final approved it, goes to our docs team. Docs team will send those docs to the notary or the title company. Title company will then call you, get you scheduled to sign. Once all that is signed and we then get those documents back, we have to review them to make sure you didn't miss any signatures, initials, all of that stuff. So you have to allow a little bit of time. Usually it's just a few hours, it's nothing crazy. The earlier we can do it, the better. Sometimes it's better to sign 2 or 3 days before you're supposed to close. That way, the day of closing, you're just waiting around for it to record and to get your keys. Which is the final steps, right? Once you sign the final loan docs, we verified them, we send our money for the loans, seller gets paid, real estate agents get paid, I get paid, everybody gets paid, and you get the keys to that house once it records with the county. So once the money is at the title company, they have now funded. They still have to record. That's what records it with the county. That's what changes the legal ownership from the previous seller, previous owner, to you. And that's when you get your keys, move in. It's your house. You can party all night long. You do whatever you want. That's the beauty of homeownership. So that's what you can expect once you're officially under contract, at least when it comes to working with me and my team. Can't speak for other loan companies out there, but I promise you'll have a fantastic experience. Even though sometimes we might ask for things that you think are stupid, just know in most cases I also think they're stupid, but usually we can explain it and it does make sense at the end of the day. Make homeownership happen for you. It's an easy process, not as hard as you think it might be. Got this.